Hello and welcome to the weekly market analysis. This segment explores the performance of Indian equity markets during the trading week of September 1st to 5th, 2025. The market saw continued volatility reacting to mixed global cues, FII outflows, and key domestic data points like GDP and manufacturing PMI. We delve into the key drivers of this week's movements, analyze sectoral performances, and provide insights into what traders and investors should consider moving forward. The Indian stock market continued its volatile run this past week. The benchmark Sensex closed at 79,720, registering a marginal gain of 0.49% for the week. The Nifty 50 ended at 24,420.5, seeing a slight dip of 0.03% for the week. This performance indicates a cautious sentiment as the market grappled with conflicting signals. The broader market, represented by mid-cap index, showed a resilience with a gain of 0.2%, while the small-cap index declined by 0.5%, suggesting a selective approach by investors amidst the current volatility. Several factors influenced investor sentiment this past week. The lingering impact of the US tariffs on Indian exports, which came into effect last week, continued to dampen sentiment, particularly in affected sectors. India's manufacturing PMI data released early in the week showed continued strength at 55.7 in August, signaling robust economic activity. Additionally, India's Q1 FY26 GDP growth was confirmed at a 5 quarter high of 7.8%, providing a strong domestic positive. However, FII remained net sellers for the 10th consecutive week, offloading 15,321 crore in equities. This persistent selling was offset by robust domestic institutional investor buying totaling 21,650 crore, which continued to provide crucial market support. Crude oil prices experienced volatility, with Brent crude nearing 87 US dollars per barrel during the week due to supply concerns impacting sectors reliant on oil. The Indian rupee remained under pressure, trading near 87.5 against the US dollar. Sectoral performances showed a mixed picture during the week. The Nifty PSU Bank Index emerged as a top performer, driven by Q1 earnings and improving asset quality. The Nifty Financial Services Index also closed higher, benefiting from sustained DII inflows. In contrast, sectors directly impacted by US tariffs such as Nifty IT, Nifty Pharma, and Nifty Metal faced continued selling pressure. The Nifty Auto Index also struggled despite positive Q1 earnings from some companies. Tata Steel and Maruti Suzuki were among the top losers, reflecting the broader market's cautious mood. However, several mid-cap and small-cap stocks saw strong upward momentum, outperforming the benchmark indices, highlighting a shift towards smaller, potentially undervalued companies. From a technical standpoint, the Nifty 50 traded within a range, finding support near 24,350 but facing resistance around 24,550. The market's attempt to break out were hindered by global uncertainties and FII outflows. Experts noted that NIF that while the overall trend remains cautious, that strong domestic fundamentals, as indicated by GDP and PMI data, provide a base for potential recovery. Investors are advised to focus on quality stocks and sectors showing earnings growth resilience, particularly in the mid cap and small cap segments. The market's direction in the coming week will depend on the evolution of global trade tensions and FII flows, alongside domestic liquidity and corporate news. This analysis is based on information available as of September 5th, 2025, and market conditions are subject to rapid change. Investors are advised to consult with a financial advisor before making any investment decisions. Thank you for joining us for this week's in depth market update. Stay informed, stay cautious, and we will be back next week to continue our analysis of the market movements.